What's up, ladies and gentlemen? Welcome to another edition of This Week in Crypto. I'm your host, Brian, alongside my co-host, Dino. We're excited to jump into quite a few interesting metrics on a volatile week, a week where we saw two all-time highs for the two largest assets in crypto. And we have a lot of data and metrics to churn through to go over exactly why we saw these all-time highs happen and where we see things going from here. It's going to be an interesting upcoming couple of weeks as we close out April, to say the least. And as we can see right now, things are quite volatile. We were actually noting right before the call that Ethereum was seeing its biggest, or at least most rapid drop in arguably the last, maybe even in 2021. It's not a large drop, but we saw something like a 6-7% drop in the last 24 hours, and it's just rebounded about 2% after dropping 2% in about 5-10 minutes or so, and that's pretty much the definition of volatility. So we're going to be talking a little bit about that, talking about where Bitcoin stands as it kind of teeters above 60,000 right now with a little bit of uncertainty, and what the crowd is thinking of that, of course, and what's happening behind the curtains on-chain wise. We saw an all-time high for one of our key metrics for it, and we'll touch on exactly what that was in just a few minutes here. To remind everyone, as always, when we go through all of our metrics here, this is not with the intent of giving any sort of investment advice. Our job is to report on what the data is showing, trying to note significant outliers and trends and give some context as to where we stand right now, but by no means are we here to tell you to buy or sell. Everything is intended to essentially report the news and nothing more. So keep that in mind. As we look here, as always, to start off the calls, we're looking at the price changes for the top 100 or so assets in crypto over the last 7 days. And we mostly see a sea of green, as you would expect when Bitcoin and Ethereum hit all-time highs. Obviously, the last 24 hours has been a little more of a correction, but certainly not enough to put, Bitcoin here at 4%, Ethereum at 15%, didn't put them in the red by any means, right? And justly, we've seen mostly a sea of green with altcoins when Bitcoin and Ethereum exploded the way they did more midweek. So obviously, you see one huge outlier right here by the name of Dogecoin, everyone's most favoritist meme coin, as they say. 422% in the last week is ridiculous. Not something you'll typically see for any asset, let alone a coin that is typically known for being kind of the ironic choice for a lot of people to invest in. But Doge really just proves that this market is a reflection of the power of the people, right? And if the power of the people collectively get together and decide that Dogecoin needs to pump, and they do so in large enough numbers like they have been, we see things like this happen. Really quickly, I'll show the price chart here. If I zoom into just the last couple days, we can see that it has peaked just a few, actually, literally, I think in the last half hour, it peaked at about 43 cents or so. Give or take. And I think when I went to bed last night here in Los Angeles, it was at 28 cents. So that really just shows how much more it continues to explode. And we'll touch briefly on where we think things are going. But obviously, with it not being an ETH-based asset, we'll have kind of a limited take, but give you a crowd perception snapshot at the very least. Other notable assets we saw, of course, we have XDC, ETC, Ethereum Classic. We had, of course, XRP, which was almost to doubling range about 24 hours ago. Now it's back to about plus 55% over the last week, which is still significant. And besides Doge, which is now 8th market cap, XRP at number 4 is pretty much the best performing asset in the top 30 or so. So lots of really big pumps from many assets. We had a big DeFi and Ethereum based asset pump at the beginning of the week. So you'll see a lot of those having particularly good performances. Maker is notable, where they're up about 50% in just the last week. I wanted to find a few other ETH-based assets that were. I know Uniswap was doing really well, but it's
Yeah, there was
corrected.
like
Chainlink,
Aave, Chainlink,
yeah,
basically a few top DeFi coins had a very good day yesterday, somewhere between plus 20 and plus 30% for many of them. Most of them are, experiencing some pains, intraday pains, in the
right.
past 24 hours alongside Ethereum. Yeah.
Yeah, and as far as losers go, there were not many, but notably here, BitTorrent, which many of you remember us reporting on a week ago, having an absolutely stellar beginning to April, has now corrected. We saw Clay having a 20% correction, Hot, which was also having an incredible beginning to 2021. It's finally showing a sign of correction. Hex and Engine, which is interesting. Engine was one of the NFT darlings that was really pumping for the first quarter of 2021 pretty hard. Any other projects you want to touch on here before we move on to some Bitcoin and Ethereum stuff?
I guess we can briefly talk about Doge, just because I already see comments in chat asking us where they can short Doge. So one of the things to mention about this coin at the moment is if you want to, yeah, exactly. If you want to show our social trends, number one and number two words on our list of the biggest topics on cryptocurrency social media at the moment are Doge related. So the way that we calculate this list is we currently track about 12 to 1500 different cryptocurrency related social channels. This includes Telegram groups, crypto subreddits, Twitter accounts, pretty much everywhere that we can find the main topic of discussion being around cryptocurrencies. So at the moment, Doge is seeing massive spikes in social volume or social mentions relative to its previous 2-week average, which is the way that this list is kind of calculated. Is this good or bad? Usually it's a bad sign. So we've done some analysis, we've done some backtests on the idea of how spikes in social volume interact with the price of the coin, right? In general, one of the things that we've noticed is if you, Brian, open up, I can actually share my screen if you don't have it near you.
Just drop me the
latest.
link.
Yeah,
I had
okay.
it open before, but
Sure,
I don't
sure.
have
Let
it
me
up on
share
my
the
tab.
link right now. So we've done some backtests recently about this phenomenon. And one of the things that we've noticed is on a sample size of about 650 different coins, we've looked at about 650 different events where a coin's name claimed the top 3 positions on our list of social trends and what happens to its price on average in the 20 days beforehand and the 20 days afterwards. So this is the result of that backtest. As you can see on a relatively large sample size for cryptocurrencies, so 650 different events, we have seen the price of these coins pretty much shoot up in the 4 to 5 days beforehand, which makes perfect sense because once the coins become very much talked about, the reason that they're becoming very much talked about is usually because they're pumping, right? And then in the next 20 days, on average, the price of the observed coins drops by 11% in price. The reason why we believe this is so is the fact that these massive spikes in social volume usually indicate peak hype moments. It indicate a period where, number one, the crowd is very much aware of the coin. It's becoming actually hyper aware of the coin. And there's going to be less and less buy side pressure because everybody that wanted to buy into the rally is already aware of it and is already kind of in. So the buy side pressure is going to be declining in the next coming days. And then the second thing is that the crowd is in general sort of becoming irrationally confident about the coin's price performance, which is usually the time where you see whales begin to offload some of their bags and mitigate risk. These sort of moments of extreme bullish bias have rarely been a friend to cryptocurrencies. So for now, we're seeing Doge continue to pump, but it's definitely a concern that we're currently seeing it as being one of the most discussed topics on crypto social media. And actually, Brian, if you look at social trends and you just type in Elon in our social trends there, yep. And then in URL, change the price from Bitcoin to Dogecoin. Yep, right there.
And here too, right?
So what you're going to see now is you're going to see the amount of Elon-related mentions on crypto social media relative to the price of Dogecoin. And so one of the things that you can immediately see is back in January and February, pretty much any time that Elon tweeted about Dogecoin, we've seen massive rises in Doge's price. However, each of those sort of large spikes in Elon-related mentions seems to have coincided with a short-term price top for Doge back in February and January. So for the first time in a while, we're once again seeing large amounts of mentions of Elon Musk, obviously because of the few tweets that he did put out about Dogecoin in the past 24 hours. So another sort of potential warning sign for Doge, seeing what happened in January and February, is that anytime the crowd starts talking about Doge as well as Elon in sort of larger numbers, it's usually indicative of a short-term mania and a local top incoming. So I think that's as far as we should go about Dogecoin. It's a meme cryptocurrency. The fact that both Doge is pumping this week, XRP is pumping this week, BNB is pumping this week, it definitely, at least to me, suggests that we are seeing some new blood enter the market. Doge is the people's coin, and it's a meme cryptocurrency that a lot of people are aware about. I saw some of the top sort of Reddit posts today on all of Reddit is about Dogecoin, not just on cryptocurrency related subreddits. I think I saw it on Wall Street Bets. I saw it on Money. So there's a lot of people just being aware of the coin and its existence in particular at the moment. And then XRP still has that bank narrative that is sort of making it very popular among newbie traders and new blood in the cryptocurrency market. So at the very least, from that perspective, it can be sort of optimistic to know that we are maybe seeing a new influx of users. However, it's certainly becoming a bit overvalued. A lot of the market is at the moment. So yeah, let's leave it at that and just move into BTC and Ethereum, because I think they have more fundamentals that we can actually talk about, right?
Yeah, last thing I want to say on Doge for now is remember the MVRV metric, guys. As we talked about this chart here that Dino just eloquently explained, when you see the crowd buy into something that is already receiving a large average percent return, it generally means that the crowd is trying to add to that average percent return, when in reality, crypto markets have a zero-sum game element to it, just like any other asset. So if average traders on average are up 40% in Doge, I'm just making up that number because we don't have MVRV available, and then you see the crowd say, oh, I want to get into that so I can get a plus 40%. Generally, that makes the opposite come to fruition more often than not. It doesn't mean that Doge is instantly going to stop pumping because of that fact, because it's trending. But on a historical basis, when you see this phenomenon happen, and Doge and Dogecoin are number 1 and 2 respectively on emerging trends, it's a sign that the crowd has discovered a rapidly pumping coin and wants to get into something that is already showing severe overvaluation on the MVRV side.
So Chocobonio is mentioning just in chat right now, number one, that there's an enormous amount of short interest on Doge. We discussed this in one of our team calls recently, about an hour ago. Yes, indeed, there's quite a bit of the funding rate for Dogecoin on high volume exchanges is quite low, so suggesting that there's an extremely bearish bias, at least on that side. But he's also asking if we can kind of discern whether these mentions of Dogecoin are positive or negative in nature, and in general, how many people are talking about shorting Doge at the moment. So Brian, if you actually type in Doge and short on Santiment, you'll see that there are also interesting patterns there. So actually, just type in, make it one query. So Doge and
or short. And got it.
Yeah, and is probably the best one, because what we're going to see now is we're going to see all of the mentions of both Doge and short within a single message, within a single comment on crypto social media, right? So yeah, this is what we're seeing right now. There definitely does seem to be sort of implosion of short-related messages for Doge.
And for context, you can see what happened last time we had this spike here. The biggest spike happened right around late January, and the price, it's a little hard to see because the colors clash, but there's a huge retracement that happened right when that huge social volume spike happened. Now, maybe this isn't the social volume spike. Maybe we'll see one more that's, at least this big. But, playing the odds right now, it clearly looks like the crowd discovery element is at a massive spike right now that can't get too much larger. And that's generally a sign that a top is near based on what we just discussed.
Yep.
Cool. All right. Bitcoin and Ethereum. So one of our favorite metrics that kind of is a reflection of utility would be daily active addresses. In orange here are the daily active addresses, or the amount of unique addresses that are being interacted with on a daily basis on the Bitcoin blockchain, is clearly showing that we are getting pretty consistent growth over the last 6 months. And you can see this one here was actually yesterday, where we had 1.36 million daily active addresses. You'll notice that it's the highest in the past 6 months. Well, it's actually the highest that it has ever been the case in Bitcoin's history. Obviously, with the amount of new addresses being created, the network growth involved, and the recent all-time high that happened just a few days ago, this is not that surprising. It doesn't necessarily mean that Bitcoin is going to continue. Oftentimes, active addresses will fire off because people want to suddenly take profit that haven't previously touched their addresses in quite a while. But overall, the sign here of Bitcoin's daily active addresses growing is a good one. And really what you want to see is a rise in these active addresses while the price stays flat, which we haven't really gotten an opportunity to really see because the price has been so volatile and mostly just climbing and climbing for the last 6 months. But this is a great chart to keep an eye on because it's going to really tell the story if and when Bitcoin makes that correction, whether the active addresses continue to rise up or if people start to get tentative and passive and a little worried to make a move in either direction, which would ultimately be a bad sign due to lack of utility. On the flip side, we have Ethereum here in pink, and it is showing a similar story. It almost hit a 3.5-year high, I think January 2018, so we'll call that 39 months ago, right about here on April 2nd, and then April 13th. It was very close to hitting basically pre-January 2018 levels, but it's in that vicinity, and you can clearly see an even larger rise. It was sharper, especially right here where things started to drop in early March. We quickly got a big turnaround on that, and now it's a pretty sharp rise. So I find the address activity right now to be quite fascinating.
So actually, Brian, while we're talking about BTC, okay, you were just going to mention funding rates. I think one of the things that we can kind of talk about here is the insight that I wrote. I think it was 2 days ago. I think it's a nice sort of reflection point, or actually it was yesterday evening. All right, so I wrote an insight 2 days ago, or yesterday evening, however you want to put it, about Bitcoin's new all-time high and what the on-chain data says. And two things that I mentioned in that insight, actually I close it by saying, and I'll share it in chat for people that want to know. The last sentence of my insight was, social metrics and funding rate remain a concern and may require a short-term correction to properly normalize. So this was while Bitcoin was at around 64K. So that's what we've seen a couple of days ago. Number one, we've seen this massive spike in funding rate, not just for Bitcoin, but for pretty much all of the top caps. Ethereum had a massive spike in funding rate, XRP as well. in general, the derivative market had shown an extremely bullish bias towards large cryptocurrencies, large cap cryptocurrencies on high volume exchanges. Currently, we're looking at BitMEX, but it was the same story on Binance, Huobi, OKX as well. So this was sort of the first sign that, as you can see previously throughout this rally, large funding rates suggesting that, on average, the cost to hold a long position is larger, and therefore, the market is bullish on average, has coincided with stretches of with periods of incoming correction for Bitcoin. So it wasn't really that much of a surprise that we are going to see a period of short-term normalization of these metrics, which usually means that these over-leveraged longs are going to be liquidated in the short term so that we kind of move back into the neutral territory. It was the same thing, like I said, for Bitcoin and Ethereum, but it was just sort of one part of the story. So while the derivative market was very bullish, we have seen the same sort of move into extremely bullish territory in our social metrics as well for Bitcoin. So if you look at social volume and social sentiment for Bitcoin, you'll notice several sort of short-term worry markers or markets sort of points of concern for BTC, right? So if you, Brian, if you take the last 3 months, I think it might be a better, a more clear view. Yeah, and you can, I think for now, cancel out the funding rates just so we can kind of see it, see the price relation to social volume clear. So similar to what we just spoke about for Dogecoin, it happened with Bitcoin, obviously not as dramatic, but there was a sort of substantial spike in the amount of Bitcoin-related mentions on crypto social media right as we broke the 60K mark again. It was pretty much the biggest spike in about a month, suggesting that the crowd and the market in general has become all of a sudden very much aware of Bitcoin's rally and in fact very much interested in the performance of the top coin. So you can definitely see both on March 13th and on and on February 23rd, both of previous local tops for Bitcoin, we have seen a similar uptick in the amount of social mentions for BTC. Like I said, these types of moves generally tend to indicate peak hype and a period of market euphoria, which is usually not a great sign for the coin. If you look at Ethereum social volume, it actually caught the top perfectly, this latest top. Right there. So we had this massive spike in the social volume. It was one of the largest spikes since, well, first of all, we've had another spike around the, what is that? It's like, can you scroll down a bit, Brian? I can't see the dates.
Yeah.
Yeah. So we had a massive spike on March 31st, right before that correction. And then we had another big spike in social mentions of Ethereum, again, on February 23rd, right before pretty much we saw the entire market dip a little bit. So in general, funding rate suggested that both Ethereum and Bitcoin and the market overall has become increasingly bullish about the short-term potential of these top caps. And then social mentions were kind of skyrocketing through the roof, especially for Ethereum, making it pretty clear that we were getting a bit overheated. And then if you look at maybe the most notable point of all of this, if you look at Bitcoin's social sentiment, it had a massive spike, and maybe it's best that you look at it on graphs, Brian.
Yeah, I got that one open too.
So what we're gonna see here, and be sure to smooth it out to maybe almost all the way down. Maybe leave one tick. There we go. So just so we can see the data in the lowest intervals possible. So what you're going to see here, what I just showed you in terms of social mentions is the amount of Bitcoin related mentions overall, but it doesn't really tell you whether those mentions are positive and negative in nature, right? It just means that the crowd is talking about the coin more than usual. This metric tries to capture the mood of the crowd. So all of those mentions that you just saw, we put them through a machine learning algorithm and we try to label all of these messages as positive, negative, or ambivalent. And the result is this chart. So the massive spikes suggest that the crowd is becoming very bullish about the coin, and then massive drop-offs suggest that the crowd on average is very bearish about the coin. So we've seen the biggest spike in Bitcoin's bullish sentiment, and it was very quick, and it only lasted for about 24 to maybe 48 hours. A massive spike in bullish sentiment toward Bitcoin, the biggest spike since early February, suggesting that the crowd was becoming increasingly bullish about Bitcoin's prospects, probably because all of the other top caps were following the course. And it was probably, for me, one of the biggest signs of concern that we are, headed for a short-term correction. Now, the good news is that in the last 24 hours, a lot of that bullish sentiment has kind of been washed away, not just on the funding rate side, but also in terms of Bitcoin social sentiment and social volume. All of these metrics are starting to normalize, but they did point to an increased risk of a short-term correction. They did point to sort of largely overvalued conditions in the midweek period that may require us to chill out for a while before another leg up, a sustainable leg up, can be made. So bad news was that we've seen these large red markers on Wednesday and Thursday. The good news is that they're starting to normalize. I don't think we're still out of the woods, but I would keep an eye on social sentiment, social volume, and funding rates for just both Bitcoin and Ethereum, because I think they might be able to tell us where the market will be headed next, as we get into the last week of, actually the last 2 weeks of April.
Yeah, there are two things I tend to look at here on the weighted social sentiment chart to really grasp a good sign of a reversal in either direction. Right now, of course, we're in the pumping direction still, even with the very mild correction that's been happening the last 24 hours. And what I look for is either a major extreme outlier like this or like this, or just a general grouping of a kind of an extended period of time of positive sentiment. Right now, we have kind of a medium spike. Obviously, as Dino said, this is the biggest in about 2 months. So that's, maybe calling it a medium spike is a bit of an underplay. So it's kind of a large-ish spike, but not quite on the level as like December 2020 or May 2020 when things were really rolling. What I would be looking for right now is a sustained amount of positive sentiment toward the coin as a really good indication that a correction could be coming. Right now, this is too much of an outlier for me to feel really confident that this was the big spike. But of course, this is just one metric out of many. And we need to keep in mind that weighted social sentiment is not the sole dictator of where prices are going to go. That being said, it's a good one and one to keep a close eye on. So if you have Sandbase Pro, make sure to check out graphs.santiment.net/social. And of course, we also have it on right here on Sandbase, and you can just isolate Bitcoin by itself. I like to put it at 1 day here. So you can just go to the settings, click on 1 day in the interval. And if you want to compare Bitcoin and Ethereum together, click shared axis and you'll see they'll both meet right at 0%. Remember that the current day, though, on Sandbase is going to be showing as very negative until the day completes. So overall, when you see this, try to ignore it and just look at the past full previous close day.
Yeah, so Brian, first of all, I'm just sharing my BTC insight for everyone that's interested in reading it. One last thing that I wanted to mention as far as Bitcoin is concerned. So we talked just about off-chain indicators. We talked about derivative side of the things. We talked about social side of the things. One last sort of cause of concern that I've seen, and I actually made it the thumbnail for this video, is the behavior of large Bitcoin addresses over the last 48 to 72 hours. So if you look at the balance of addresses for our supply distribution metric for Bitcoin, and if you merge the two groups, 100 and 1,000 BTC holders and 1,000 to 10,000 BTC holders in particular.
So just to clarify, you want absolute values, not the total number of addresses, right?
Yeah, so instead of looking at the supply distribution by number of addresses, let's look at the supply distribution by the balance of addresses. So what we want to see is we want to see how much Bitcoin is being held by large addresses and what is the trend looking like. Are they continuing to accumulate or are they sort of dumping for the time being? And if you look at 100 to 1,000, 1,000 to 10,000 groups, those two merge together.
These two here?
So 100 and 1,000 and 1,000 to 10,000. So
got it.
Yeah, those two.
So I'm going to merge this one and
basically
this one.
Yeah, Bitcoin millionaires. And look at the last 3 months. Yep.
Doesn't want to show the labels right now. I can give it a quick hard refresh and it should show up.
Yeah, for some reason it's not showing clear, sort of clear edges or sharp edges on your side.
Okay.
Let me share it real quick so people can see what I see. It's
Sure.
a bit clearer on my side. Okay, one sec. Share screen. There we go. All right. So this is the thing that I wanted to show. Merge these two groups and then show the price. And there we go. It's just a bit nicer. So, okay, this is the group that I like to see, these two groups combined. Basically, millionaire Bitcoin addresses. And what we're seeing here is we're seeing the total amount of Bitcoin held by these addresses. Currently, we're looking at how much they hold as a percentage of total Bitcoin supply. Currently, about 48% of Bitcoin's total supply. But we can also look at the absolute amount of Bitcoin that they hold. So look at here, we're going to see that they hold about 9.1 million Bitcoin overall. So one of the things that I find interesting about this group of addresses is that even though the trend has been up, there have been several sort of short-term dips. On February, before the after all-time high crash, and then on March 13th, right around the top, we've seen another sort of 40,000 Bitcoin being shed by these addresses. And then more recently, in the last 48 hours, there has been a slight decline of about another 40,000 Bitcoin being sort of removed from these wallets. So combined, the total amount of Bitcoin held by addresses holding between 100 and 10,000 Bitcoin, which is quite a large sort of group of users, has dropped by about 40,000 BTC. Like I said, there have been several times, including this one and this one as well, several times where this group of users has kind of mirrored market movements or sometimes preceded market moves. So the fact that we are also seeing, and if I zoom into the last month, you'll kind of see that it's the biggest drop so far in April. We have seen sort of a slight signs of a slight decline of confidence among Bitcoin whales for the time being, right? I don't think it's a cause for major concern. I think overall the trend continues to be upward. The sort of a trend in terms of what the large Bitcoin holders are doing continues to be accumulation overall. However, several times during like short-term moves, they do seem to be taking some interim profits, and that tends to coincide with periods of short-term correction as well. So just to be clear that, outside of looking at off-chain indicators, we have seen a few on-chain data points that have been a bit concerning. Outside of whales, we can also mention that exchange inflow for Bitcoin has had a slight uptick as well today. So the amount of Bitcoin being moved to exchanges has spiked a little bit as we started to correct, suggesting that there might be an elevated amount of sell-side pressure for BTC as well. So that's going to be just a few additional indicators that I wanted to mention for BTC. Some of the things that I think are in fact driving this short-term dip today. A lot of sort of both off-chain and on-chain signals that short-term profit taking is at play. And we're going to see sort of a period of correction as a result, Brian. So let me stop sharing my screen and you can go back to your presentation.
Sure.
And by the way, guys, before Brian continues, let us know in chat what coins you would like us to look into during this stream. So we're going to take maybe 5 or 10 more minutes talking about general state of the market, Bitcoin and Ethereum in particular. And then we want to hear your questions. What coins are you guys interested in right now? Anything outside of DOGE? What actual coins are you guys interested in right now? What are you, especially if they're living on the Ethereum blockchain, we have a lot of on-chain data for them, so we can get deep into what the sort of overall health of these networks is looking like in these coins. So if you're looking at the potentially undervalued coins, if you're looking at maybe going into a dip for certain coins, let us know, and we can at least do some impromptu on-chain analysis to end the stream. So sorry about that, Brian. Go ahead.
All good. Yeah, good reminder. Remember, ETH-based coins are the ones we really have the most data on. So bonus points if you choose one of those. So we're looking at, this is kind of an alternate perspective of what Dino just showed with the Bitcoin millionaires. This is breaking apart 4 different tiers of Bitcoin holders based on size and showing the amount of addresses that currently fall under that category at any given time. The gold line here is, of course, the biggest whales, those that are holding more than 1,000. I refer to it a lot because I think that it's a very good reflection of where prices are going to go in tandem with the absolute values that Dino just showed. And right now, we're continuing to see kind of a flatness when it comes to the amount of these addresses. On February 7th, there were 2,489 addresses that had at least 1,000 Bitcoin in them. Right now, we're sitting at 2,232. So give or take an 8 to 10% drop that's kind of staying low right now. And even more notable, look at the 10 to 1,000 addresses. That's about 600,000 all the way up to about $60 million USD that they're holding. It's pretty clear that they have just continued to profit take and mostly get punished. I mean, they started profit taking back in November 2020, and they peaked when the price was at about 17,000. And there are less and less of those addresses over time. And here we are almost, I'd say 3.5 times that price now. So long story short, I think that the gold line really follows the price or leads the price more than the red. And the red is a little more indicative of those very large but not whale addresses. And then the pink and gray, tan lines here, they're kind of surging right now, as you would expect when prices have been absolutely on a tear over the last at least 6 months or so. Because there are so many of those new addresses coming in, my theory is that that's kind of overpowering the bearishness or the profit taking happening by those whales right now, because there's simply such an overpowering amount of network growth happening on Bitcoin. Eventually, if you start to see these pink and tan lines start to get a little bit back to a normal growth rate, that's when it might be a time for a concern. That might happen as a result of a mini dip that could be in progress right now, or they could just decide to, they might get tired of the rally themselves, and there may just be a smaller amount of those new addresses being created after a while. But this is a really interesting view as well. To flip it over to Ethereum really quick, it's looking a little better. In this case, we're looking at 10,000 plus Ethereum to sort of discern what a whale officially is. We're at about 1,268 whales right now after being at 1,282 at a peak back in late February. So really not much of a drop off at all after we really saw this bounce a week ago, right before we hit this all-time high. So there is quite a bit of a leading aspect to this chart that I definitely encourage you guys to check out. And you can see back here in mid-February when it was starting to drop down, you kind of had some telltale signs that there was going to be a dip here. And even though it came back up, there was a consistent dip until right about here, and that's when we made that all-time high. So I just wanted to point that out, show that there's definitely some value to following what those top tier addresses are doing for the top 2 assets in crypto. And I think that's a good stopping point for Bitcoin, Ethereum, unless you have anything else to say, and we can sort of do a quick synopsis of SanR now, if you'd like, Dino.
Yep. Let me share my screen. I'm reading your comments, guys. I'm seeing a few mentions of Link. I'm seeing Engine. I think we can start with Link and then just kind of, figure out. Oh, you made a straw poll. Thank you, Max. All right, so Max made a straw poll. So guys, go vote on what coin you would like us to cover. We'll probably take at least 2, and then if there's enough people staying at the end, we can take a few additional questions. Yeah, so I just wanted to talk about SanR before we move on. Some of you probably are already familiar. This is the sort of one of the projects that we've been working on very hard recently. In addition to our market intelligence platform, we have also built a decentralized marketplace where you can predict where the market goes next, and you can kind of participate in first of all, just competing against me and other people in the Santiment community and Santiment team, but you can also compete for actual rewards for your market intelligence and market analysis. And most importantly, I think you can just kind of figure out how other people are reading the market, where people are thinking, these are the top signals at the moment of what people think is going to happen next. You can see several sort of bullish calls for Ethereum. BNB, obviously, a lot of people seem to be sort of down on BNB given the historic rally that it's had over the last week or so. It's very easy to create a signal if you don't want to stake tokens in order to get into a reward pool for every for a bi-weekly competition. You can also just do it for fun and to kind of make your own sort of blockchain trading journal, because every signal that you make is being recorded on the blockchain directly, and it's issued as an NFT. Everybody loves NFT these days, right? So every signal that you make about the market is immutable and forever sort of remains as part of your market reputation, whether you were right about a coin and or whether you were wrong. I myself, if you look at, so these are some of the, you can see some of my previous signals. But this is an account that I use mostly to demonstrate how SanR works, so take it with a grain of salt. We were right on some of the Bitcoin predictions. We were wrong, unfortunately, on my 0x prediction. I blamed this massive pump out of nowhere for 0x. Until then, I was doing fairly well. So just to demonstrate what it looks like, if we, for example, think that Bitcoin might be able to rally. So if we say, okay, a lot of these short-term indicators that were kind of blowing up, like social data and derivatives funding rate, they're now starting to normalize. So we might see Bitcoin find its own bottom around the 61K mark and manage another leg up. What you can do is you can simply set a rise signal. You can make additional details here like the target price or stop loss, and then you can open a forecast. And just like that, you have your own sort of prediction of where you think the market is going to be headed next, and you can compete against other people. And also one thing that I like to do is I like to find people that are very good at predicting the markets. Like, for example, if we look at this participant, we can see that currently its performance is about plus 25% on open predictions and about plus 65% on its closed predictions. So the guy seems to know what he's doing. So if I like the guy, number one, I can add a note about him, just basically what I like about him, what I like about his market acumen, and I can follow his signals so that I can, kind of figure out what the person that so far has kind of proven that he has some amount of experience and some amount of skill in predicting market moves. What is he thinking about where the market is going to be headed next? So you can kind of see all of his predictions, how many of them he got right, how many of them he got wrong, and follow them for additional signals. In order to follow an account, you do need to have a balance. You do need to have a certain amount of SAN staked. So you can stake as high as 650 SAN. I do suggest staking as many in the first the first time you do it, just because of transaction costs, obviously. And then it remains in your wallet. It's just sort of a staking mechanism for follows. So currently, we just made a BTC USD SAN rise signal. It's already up 0.18%. I don't think it's going to be that much of an easy way up, but this is something that I wanted to show. Guys, if you want to sort of compete with us to predict market moves, go to sanr.santiment.net and see what the other people in the Santiment community are talking about, or how they're reading the market. And with that out of the way, I wanted to kind of look at Chainlink in particular, because I do agree that Chainlink had a massive rally. Aave, Uni, Compound, Chainlink, those were the four coins that had the biggest rise in the last, yesterday, over the last 24 hours prior to today. So Chainlink in particular had a few signs that we're probably going to see a short-term correction. Number one, there was a massive spike in social volume, similar to what we saw with Bitcoin. Pretty much the biggest one since, how big is it? Since this high right here. So there was a lot of additional sort of mentions of Chainlink over the last 24 hours, pretty much coinciding exactly with the top. I think it's a very similar pattern to what we've seen with Ethereum. Yeah. mentions of Chainlink rise, mentions of Ethereum rise, hitting it right at the tail end of the rally there. So as far as social mentions are concerned, obviously, like Brian showed a minute ago, we've done some analysis and backtests on this phenomenon. It really does seem to be fairly reliable that when you see these massive upticks in mentions throughout the rally, it just suggests that the crowd is becoming super hype about the coin, and that's not usually the place where you want to buy. So on the on-chain side of things, I'm seeing a few interesting signals. Number one, I'm seeing a spike in daily deposits over the last 48 hours. Deposit addresses are addresses that are used to funnel link to exchanges. So when you send link to an exchange, to a centralized exchange, it doesn't go directly through a cold or hot storage of, Binance or Kraken or whatever. It first passes through what's called a deposit address. The only reason why these addresses exist in the first place is in order to funnel a particular coin to an exchange. So the more active deposit addresses there are on a daily basis, the more potential sell side pressure there is, because it suggests that more and more people are moving link to an exchange, right? So we have seen a slight uptick in the amount of daily deposits for Chainlink. It went from 295 on April 9th to 542 yesterday. So quite a large, basically about a 40% uptick in the amount of addresses moving Chainlink to exchanges. And, you do see similar upticks in several sort of local top periods. There has been, in general, sort of an exhausted sell-side pressure, it seems like, for Chainlink for a while now, before the rally. But at the moment, it does seem that a few people are starting to take advantage of the pump and claiming profits. Another relatively concerning signal that I've seen for Chainlink is its MVRV. So MVRV in particular is one of the metrics that we like to talk about a lot at Santiment. It's a metric that it's an on-chain metric that tries to calculate the average profit or the average loss of a certain group of Chainlink holders or X coin holders, right? So the 30-day MVRV ratio that we're looking at right now shows the average profit of all addresses that have acquired Chainlink in the previous 30 days. Basically, let's call them swing Chainlink traders, right? So yesterday, the average profit across all addresses that have acquired Chainlink in the previous 30 days was, let me zoom in so we can pinpoint exactly how much it was. It was 41%. So on average, all addresses that have acquired Chainlink in the past month were at about plus 41% on their initial investment. So the way that MVRV works in general as an indicator is the way that people use it is the higher the MVRV gets, the larger the unclaimed profits. And therefore, the more risk there is that people are going to start claiming some of these profits, applying sell-side pressure, and therefore tanking the price in the short term, right? So what you see here previously is that Chainlink's February rally sort of peaked at roughly the same levels, plus 38% compared to plus 41%. And in general, historically, when we look at these levels, it definitely seems that, anything about sort of plus 35 plus 40% is rarely sustainable for more than a few days, and does suggest that the coin is overvalued on average. And it does suggest that there's potential for people to start taking profits en masse, and therefore tanking the price in the short term. And I think it looks, the MVRV for a lot of DeFi coins looks the same over the last week, because a lot of them were just pumping like crazy. You can see the Ethereum side of things looks fairly similar. So Ethereum's MVRV went up as high as, and by the way, the MVRV for each coin is different. The levels are, it went as high as about plus 25% on average. The short-term traders were for Ethereum. Basically, all swing traders for Ethereum were about a quarter up on their initial investment. And in general, that if you ignore this massive outlier, which is the first time that Ethereum broke 1K in about 2 years, and even that only lasted for about 2 days, you can definitely see that these levels are rarely super sustainable. Usually what you want to see is you want to see these sort of low levels or even negative levels of MVRV, suggesting that the coin is actually undervalued according to on-chain data, right? There's not a lot of sell-side pressure happening at the moment. So looking back at Chainlink, one last thing that I want to see, actually I want to see two things. I want to see daily active addresses for Chainlink, just to kind of figure out what the total overall interaction with the Chainlink token is, whether it's growing, whether it's declining. A lot of times it's just going to be connected to the price of the coin, and that's why you kind of see these fairly significant drop-off in the amount of addresses interacting with Chainlink since the February top. So it went from like, what, 15,000 addresses to about 7,000 addresses on average daily. So basically a 50% decline in about a month's time. But I think in general, these levels of activity are probably unsustainable in the long term. And many of them are likely sort of boosted by deposit addresses. So it's not just people sort of using Chainlink for whatever its use case, purported use cases. It's also a lot of people just moving Chainlink to exchanges in order to sell at these rallies, right? And that's why you see spikes in daily active addresses around several local tops for Chainlink here, 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 and here, right? And that's also why you see it today as well. It's because a lot of these new addresses that you're seeing interact with Chainlink at these large levels are actually deposit addresses, basically meaning that people are just moving a lot more Chainlink to exchanges, presumably to sell. But overall, I think Chainlink's, and I mention this every time that we talk about Chainlink, I think Chainlink's general on-chain activity is super solid. Look at it today. There's about, let me zoom in. Let's call it, what's the latest tick? Okay, there's about 9,000 addresses. The latest tick of the daily active addresses is about 9.6 thousand addresses interacting with, meaning sending or receiving Chainlink on a daily basis. There's not many coins, Ethereum-based coins, that can achieve that level of daily network demand. So the best way for me to present that is if we look at a screener, test screener. Oh, that's screener 1. There we go. Link and Agi are tied for first place in the poll. Okay, thanks, Max. So if I look at the screener, I'm going to select all of the coins that exist on Ethereum that we have in our database, Ethereum-based coins. That leaves about 1,200 assets. And then what I'm going to do is I'm going to look at all of the assets of these 1,200 or so coins that have more than, so Chainlink had about 9.6K active addresses. Let's say any coin that has more than 5,000 daily active addresses over the last day. This is the list, guys. It's Ethereum, stablecoin, 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 wrapped Ethereum, and Chainlink, right? So, I mean, Chainlink is solid as far as its fundamentals are concerned in sort of the mid to long term, where it's one of the most used coins on the network. It's not going to tell you a whole lot about its short-term moves, right? But as far as where it's at, as far as market demand is, I think it's, it continues to be one of the best performing Ethereum-based coins. And it's also a fairly actively developed project. So if you look at Chainlink's development activity over time, continues to grow like crazy, doesn't really pay much attention. Developers don't really pay much attention to general sort of market moves. I think, the development activity goes up or down, or sort of in general trends upward regardless of Chainlink's price in the short term. So the project is solid. That there's a lot of investment in coding manpower for Chainlink in general. So long-term or mid-term indicators like daily active addresses, development activity, they're all very good for Chainlink. As far as short-term things are concerned, like I said, social data is looking a bit sketchy. Exchange data is looking a bit sketchy. MVRV is looking a bit sketchy. However, all of these metrics are probably going to start to normalize over the weekend. So I suggest just keeping an eye on them as we move into the weekend. The last thing that we can maybe see is what's going on with net profit loss. Okay, so net profit loss is a metric that tries to kind of visualize the overall return on investment across all daily transactions. So the way that it works is that for every coin that moves on the blockchain, we take the price at which it was last moved. So let's say a unit of Chainlink was moved here. and we assume that that was its acquisition price, that that was the price at which it was bought. And then the next time that that unit of Chainlink moves, let's say it moves here, we take the price of Chainlink at the time that it was moved next time, and we assume that that is its sell price, right? So the difference between those two prices becomes this chart. So when you see spikes in network profit loss, it means that on average, all of the Chainlink tokens that are moving on the blockchain are doing so at significant profit. And that's what you have seen over the last 24 hours as well. You've seen a massive spike actually in Chainlink related network profit loss, suggesting that on average, people seem to be, or the link tokens that are moving seem to be moving at massive profits. And sometimes for some coins, we see this sort of coincide with local tops, because it suggests an influx of new sell side pressure. Like, for example, I think I've seen it for, was it OMG recently? Yeah, OMG is a good example. So, these sort of moves, spikes in network profit loss around the local sort of general rallies suggest that we are sort of moving into a period of elevated profit taking, elevated sell side pressure. You can even see it here before a correction. And that's why sometimes they can suggest that we are also sort of moving into an overvalued territory for the time being. Again, these are some short-term indicators that we can take a look into. I want to move into AGI as well, since it seems to be a popular choice. But in the short term, Chainlink's looking a bit iffy just because of elevated MVRV values, elevated social values, elevated exchange-related activity. But overall, it remains one of the most used coins on the Ethereum blockchain. So, I wouldn't be worried about Chainlink in the long term. Okay, AGI, singularity. So, okay, let's look at AGI. I haven't really looked at this coin for a long time. Maybe since the start of the rally, really. So I'm actually interested in seeing what it looks like. So let's start with the general on-chain activity. Actually, I need some water because my mouth is getting pretty sore. Brian, you want to start us off with just looking at sharing your screen and taking a look at the general sort of on-chain activity for AGI, and then I'll jump right back in. Just give me a minute to water my throat a bit.
No problem.
Okay, let me stop sharing my screen.
All right, Max, if you can confirm that everything is showing up okay on my end. Test 1, 2, 3. Max, if you are talking, you're muted, but I'll go ahead and just assume that everything is shown here.
Okay, I'm back.
Okay. So I'm just taking over AGI really quick and going to show what address activity is looking like for it.
Mm-hmm.
Thank you. Okay, so here's 24-hour address activity, guys. I'm going to zoom into the last 3 months, and it's pretty clear that we are seeing a nice rise. As of about 2.5 weeks ago, where we bottomed out at maybe 250, 243 addresses per hour, we're now, after hitting a spike here on April 14th, we got to 891. We're now up to 921. And it's clearly a good sign. You can see when it previously spiked, as you'll often see with any ETH-based asset, the price really just skyrockets. And we're actually seeing somewhat of a bullish divergence right now because of the fact, if I zoom in right here, the price is dropping while address activity is rising. Obviously, it's been volatile over the past couple of days, but overall, if you just look at the past week here on the 8th, when we were at maybe 350-ish per hour, being up at about 920 is a very good sign. And it shows me that there's a lot of interest and increased activity going on the network. We can also take a look at network growth for comparison. So network growth is similar to daily active addresses, but it's actually showing the amount of new addresses being created. So I'll zoom out to the last 6 months, and you can see it's pretty parallel to where address activity is, basically implying that a lot of the address activity is being caused by new addresses being created overall. There's even, this kind of simplifies things because it's showing it on a, I'm going to just take off address activity here, showing it on a daily basis instead of hourly here. And there isn't really much of a drop off at all. The drop off you saw in address activity was mostly just due to the time of day and less activity during, I believe, the midnight US hours. But overall, on a daily perspective, we're seeing our current largest day in terms of new addresses being created at almost 500. So this is a great sign. And until you see a reversal like this with less network growth, it's probably a sign that prices aren't going to drop too far. Now, of course, that's only one metric. And we can look at something else such as, well, we'll even look at development activity here to see how that's looking. It's mostly flat, so I won't get too much into what's going on there. As far as, I want to look at exchange supply right now. Take off network growth. So supply and exchanges are actually climbing a bit. This could be simply due to the price growth. I'm going to zoom out a little more. Yeah, I mean, this gives it some more perspective. This is over the last year, and we were sitting at maybe 35, 36% about a year ago as far as supply and exchanges. Even though there's been an increase since mid-January, the last 3 months or so, it's not nearly the kind of bounce in supply that's going to be very concerning compared to where we were last spring and early summer. And being at about 24% at a base, 26.6% now compared to where it was, I wouldn't call this a major concern. It actually looks like things are just fine and the supply is staying low, especially over the last 2 weeks or so. Things are actually dropping back down where it was at about 27.5 and now back down a percentage or so.
Mm-hmm. Yeah, by the way, Brian, I'm happy to take over. I have a few charts lined up for
sure.
AGI.
Go ahead and share your screen.
Okay, cool. Thanks. Let's move deposit and exchange related activity because it's looking quite interesting. So you can see my screen, right?
Yep.
Okay, cool. These are daily deposits. So similar to what we've seen with Chainlink, large spikes in daily deposits suggest that the crowd is, or users, AGI holders are moving more AGI to exchanges on average, right? And that's why you see massive spikes here, spike around this local top, and then spike around the, is this all-time high? I assume it is. Let's look at, I mean, yeah, if you discount the ICO price launch. So basically it's a spike around this price top as well. So in the past 72 hours, there has been a decline in the amount of daily deposits, which might suggest like short-term exhaustion in sell-side pressure, which could be good for the coin. In terms of the total amount of AGI moving to exchanges, you also see spikes around local tops. You can see it here, and then you can see it as well more recently here in the past sort of between April 13th and 14th. There's an uptick in the amount of AGI moving to exchanges overall. Like I said, similar to daily deposits, it's now currently last 48 hours sort of declining a little bit, suggesting that there's not an increased additional sell side pressure, but it's a question of whether these spikes in daily deposits and exchange inflow have been properly absorbed so far. So we could see a sort of an elevated, an additional sort of a move down in order for both of these metrics that suggest increased sell-side pressure in order for them to really be absorbed by the market. Now, one thing that I do want to mention as well, actually, if we look at 30-day MVRV, is that its MVRV was also fairly high, but now it's getting to a reasonable standpoint. So 30-day MVRV for AGI, similar to Chainlink, it was very high. I mean, similar to a lot of coins. It was just because of this mid-week rally, it sort of pumped the average profit of a lot of holders up to plus 45%. If you look at historically what plus 45% indicated for AGI, it generally indicated that we are sort of approaching a danger zone. Like many of the local local tops for AGI didn't even get to this level, and then a few massive outliers, price outliers, didn't really stick around the 45 levels and above for more than a couple of days. So another sort of sign that we were moving into overvalued conditions. But at the moment, This drop has really impacted the MVRV ratio of AGI, quite significantly. So at the moment, the average profit of short-term traders is about plus 5%. And if we look at the 365-day ratio, 365, there we go. It's still high, right? It's about plus 228%, but you need to put it in perspective of the current bull market, right? Yes, overall, this is super overvalued, but it's like that for pretty much all coins. Like if you look at Bitcoin, the 365-day MVRV ratio is about plus 70%. So, I mean, if we look at historically, yeah, it's super high. If we look at all time for Bitcoin, it's still very high, right? But in the context of the last couple of months, it's still a ways away from where we've seen it be in January and February and March of this rally, right? So looking back now, the MVRV has sort of dropped significantly to plus 228%. That does mean that there's still quite a lot of profits that can be taken by long-term holders, but on average, I think it's moving back into a more sustainable region, right? Especially for short-term traders. I think if you look at the 30-day MVRV ratio once again, what this basically means is that currently swing AGI traders are about plus 5% on their initial investment. So the question that you need to ask yourself is that people that are still in AGI, short-term traders that are still in AGI, are they going to be content with selling at these levels at plus 5% profit, or are they probably more likely to hold for the time being and hope that we're going to see a market-wide bounce back, right? What is the more likely scenario for short-term AGI holders? Social volumes were also very high yesterday. No, this is 3 days ago. Also very high, similar to what we've seen here and here. In general, there seems to be quite an uptick in mentions of AGI on social media, alongside the rally coinciding with its correction. Now, one thing that I have noticed, just as Brian was talking, is I wanted to look at what's going on, like who is accumulating AGI at the moment and who is offloading their bags. One concerning signal is that if we look at the balance of a variety of different AGI holders, actually, let's look at the last 3 months. So we see strong uptick in pretty much all of the sort of retail sized categories. So retail holders are continuing to accumulate AGI, and then we move into sort of mid-size holders. They're all sort of accumulating AGI. However, you look at this group of addresses, which is 1 million to 10 million, and it's the exact opposite picture. So slightly concerning given the fact that this group of addresses has also declined or sort of offloaded their bags around the local top on February as well. Slightly concerning is the fact that this large group of or sort of a group of large AGI holders is doing the opposite of the retail sector, which is sort of seemingly mitigating some risk and maybe reducing their exposure a little bit. Usually I don't like to look at the last group, because it's filled with team wallets and exchange wallets. So for more reliable analysis, I usually like to look at the penultimate group, because it is actually filled with legitimate whale addresses rather than sort of a mix mash of exchange wallets, team wallets, infrastructure wallets, governance addresses, and so forth. So another thing to kind of keep in mind is that there has been a decline in whale addresses, or the balance of large AGI addresses over the last week, which does seem to coincide with a correction as well. So overall, it's sort of a mixed bag, I think, for AGI. On the one hand, we are seeing, like Brian said, we are seeing an uptick in daily active addresses, but I also think that this is likely, at least partially, due to elevated sell-side pressure, and it's probably not sustainable in the long term. So for now, I would keep an eye on exchange metrics. Like if in the next couple of days we really see these two metrics, daily deposits and exchange inflow, continue to decline, it's going to suggest that a period of redistribution is over for AGI. So basically, from weekends seem to have sort of offloaded their bags. Bags have probably been bought up by long-term AGI bulls. And if those two metrics normalize back to sort of low levels, suggesting no additional sell side pressure, assuming that other metrics are looking good, it could suggest another leg up for AGI in the short term. MVRV is looking better and better. I would like to see it, ideally drop into the negative territory. So I would like to see it sort of here or here, where we're really undervalued according to on-chain data. Might happen. We're not that far away. So yeah, overall, I mean, it's definitely looking healthier than it was looking a few days ago. But whales dumping is a little bit concerning for the short term, to say the least. So I wouldn't be super bullish on AGI in the short term, but I would keep an eye on these metrics. And if they normalize, if we see another sort of stretch accumulation by AGI large addresses, it could suggest a period of recovery. I think that's going to do it for us. Before I end, I forgot this when we were talking about Ethereum. I want to show one interesting find that we saw today. We were looking at top transactions for Ethereum over the last couple of days because we noticed there was a massive spike. Where was it? There we go. There was this spike in age consumed, right? And there was also a massive spike in the exchange flow balance of Ethereum. Actually, a massive drop. You're going to see it now. This one. So this suggests that on average, the amount of Ethereum found on exchanges is much lower than it was a couple of days ago, right? So there's been massive withdrawals of Ethereum from known exchange wallets. So we wanted to see who is responsible for this. And we think we found the address. It's a very weird looking address. I don't know what to make of it yet, but I wanted to share it here. What you're going to see, so we're looking at the top transactions for Ethereum for between April 14th and 16th. So basically the last 2 days. What you're going to see is you're going to see one massive transfer, and it's this one. So this is 450,000 Ethereum being moved away from a centralized exchange wallet to a trader wallet. And if you actually look into this transaction, it's exactly what it says on our platform. It's going from Binance to a private wallet. So one thing that you can then do is that you can look at what this private address has been doing with Ethereum over time. And what you're going to see is super interesting. I mean, at least to me it is. So this is the the holdings of this address over the last year. By the way, if you look at this address at all, you can see that it hasn't really dumped any of the coins that it's received. It's had only a few transactions, all of them coming from Binance, and it's just kind of been stacking up on ETH. What does that mean? I'm not sure yet. Currently has more than $1 billion worth of Ethereum. So, definitely an address to keep an eye on at least. So the first sort of accumulation spree that it did was on November 3rd. So it went from 10,000 Ethereum to 250,000 Ethereum. So this was the first time that it went ape into Ethereum, right? And then it kind of chilled out throughout this rally, and then it bought more at the dip. So it went from 208,000 Ethereum to 465,000 Ethereum. So basically it doubled up on its initial investment in Ethereum. And then more recently, let me zoom in. More recently, it bought another 125,000 Ethereum on April 6th, and then another basically 450,000 Ethereum yesterday. Actually, now about 36 hours ago. So this is an address that currently has 1 million Ethereum, 1.04 million Ethereum. It's withdrawn pretty much all of it from Binance. And at the moment, it's just chilling in its wallet. That's a whale address if I've seen one. I don't know what it's doing, but if I was interested in the market moves and market action of Ethereum, I would probably keep an eye on this address, especially if it starts offloading some of its holdings. So one of the things that you can do is you can create an alert for this address, and you can say, okay, let me know when the balance of this address is less than, let's say.
Dino, there is an idea. Could it be another Binance cold wallet, which is not labeled as such?
It could be, but it's a it's a weird wallet to have because it doesn't have any sort of large activity on it. So this is the only these are the only transfers of Ethereum that it's had so far. So it definitely doesn't look like an active address. If you look at its ERC20 tokens, it's also not like it's very infrequent in its dealings with both Ethereum and ERC20.
Yeah, this is what will be definition of cold wallet.
It could be.
They just receive it. Maybe they aggregate on top of their cold wallet something super freezing cold wallet. And the ERC20 just is airdrops from different projects.
Yeah, I mean, I want to maybe we should share it on Twitter as well to see if anybody has more information about this address, because up until like a couple of days ago, it was a whale, but it wasn't mega, like it wasn't able to single-handedly crash the market or whatever. Currently, it has more than 1 million Ethereum in it, so it's either a very fortunate whale or it is indeed like a cold wallet or something that hasn't yet been discovered by the crowd. But usually, I mean, most Binance wallets are pretty transparent. You see it on Etherscan, you see it on our site as well. They're fairly reliably labeled. It could be a new wallet that we just haven't really found so far. So yeah, that's 0.5% of ETH market cap. Yes, it is. Yes, it is. So hopefully, I mean, I guess hopefully it is an exchange wallet. We should share it on Twitter and see what people can find. Maybe they can give us more information about who the heck this guy is. But in general, assuming that it's a whale, one of the cool things that you can do on Sandbase is you can create an alert for this address, and you can say, okay, let me know the next time. Because currently it has about 1.04 million Ethereum. Let me know the next time that the balance of this address goes below 1 million, right? Or goes below, I don't know, 800,000. Like if you want to keep an eye on this address once it really starts dumping. And you can create an alert so that it will let you know the next time that this address starts moving their coins, because, you know, it might be starting to offload its bags, starting to sell, take profits. You know, one of the things that, you know, I find interesting about this address in particular is that it did seem to like accumulate value during interesting events of Ethereum's price action. Like it seems to have like bought the dip, so to speak. So because of this, it's kind of, I don't know if I would really, it doesn't look to me on first glance like it's an exchange-based address, but anything's possible. It's just something that I wanted to let people know. So if you want to keep an eye on this address, guys, just go to Ethereum, type in top transactions, and just look at the last 2 days of data. You'll find it. It's by far the biggest transaction. Just click on this address so you can create an alert for it. And yeah, just stay safe out there. That's going to do it for us today, guys. Thanks, everyone, for sticking by till the end. Check out app.santiment.net, everybody that hasn't already. There's a 2-week trial for everyone that hasn't created an account yet. And then afterwards, you can subscribe for as low as $49 a month, which is one of the most reliable sort of on-chain and social data providers on the market. Thanks, everyone. I hope that this was useful. I hope that it was sort of actionable to some extent. I also suggest really checking out SanR.santiment.net. We're trying to grow this platform. It would be great if you tried it out for yourself. Even if you don't like it, let us know what you like or dislike about it. Join our Discord and tell us, whether you have some ideas on how we could improve it. In general, whether you find the UI intuitive. And we can, every week we can kind of make a sort of a competition maybe for the stream, and people that are actually in the stream, maybe a sort of close competition of our own signals and see who wins, right? So anyway, thanks for that. Brian, any last words before we sign off?
Yeah, just want to reiterate that SanR is awesome. You guys really will love it if you give it a shot. As Dino has shown a nice comprehensive look at it. we're only getting better with it. So I think you guys are really going to enjoy being able to gauge what the crowd is thinking from an objective standpoint anytime you'd like. And also want to remind you all that you've got referral links. If you go to your settings and click create referral link, you'll instantly have a link you can share for any Santiment related page. And we share 25 to 35% of the sign up cost for anyone who uses it. So it can be pretty lucrative, and we appreciate you spreading the word and continuing to come on these calls with us every week. So we're looking forward to more of these great calls, and we wish you all a great weekend, and stay safe, as Dino said.
Thanks, guys. We'll be announcing a few webinars at the end of the month. So if you really want to figure out how to use this platform of ours on a daily basis to kind of, find undervalued coins and generally use it for your advantage, we'll make some announcements on the next week's call for you guys. Anyway, thanks a lot for sticking by the end. Talk to you in 7 days.
Bye, guys.